Yeah, man. I'm saying, man, like this channel is really gonna be just like me posting like everything. You see what I'm saying? This is kind of like a way for me to study too, yo. Because I record videos, but I'm not gonna hold you, bro. I don't really watch them like that. Not on some cocky shit, just on some like. I guess I just needed another reason to like actually start watching it again. Cause I was in a little rhythm, like a little personal rhythm, and I guess I felt as though I don't need to watch my videos anymore. But one thing is for certain though, I'm gonna record as much as I can, as much as this computer can hold, because it's always good to record your trades, man. Again, shout out to the homie Sam. See what I'm saying? Like he said, yo, start recording your trades. I'm like, you know what, bro? Fuck yeah. That's what I'm gonna do. So again, I actually have to rewatch these videos quite a bit. It's not that I'm really gonna change anything when I post it on YouTube, but it's just I wanna like, rewatch it, see what I can work on in the future, things like that. I'm gonna start editing a little bit, but by doing that, I'm actually still studying. So it's like a win-win. But yeah, man, we're gonna go over a real trade I actually miss, man. Yeah, sucks, guys. And that could have got me to 85K easy. So okay, this trade right here, man. So again, man, Monday's a little tricky. Monday's a little tricky, but you can still trade Monday. Now, this trade right here, in real time, I have the video on YouTube already. I wasn't gonna take this. Why? Because one, the time. This is during lunch, bro. This is during lunch, man. Plus, I wasn't really feeling the long move. I just wasn't feeling it, bro. That's just kind of like personal experience. I just didn't want to take my shot. I mean, this is an entry. This is an injury. But you know what I'm saying? It's low probable, man. Why? It's Monday. It's during lunch. Lunch likes to manipulate sometimes. It likes to swindle you. I mean, in real time, yeah, that's an entry right there. Look how it's pushing it. It grabbed liquidity, broke structure. I mean, come on. Came into a discount. That's why I put it out there. I would have taken this if it was during 130. Hell yeah. But because it was low probable, I'm not putting my money in that shit. Straight up. Now this this is what I wanted to see right here. Here's what happened. I was actually hanging out with the fam. Shout out to my sister. What I see is there was a liquidity grab during lunch. Lunch is between 12 to 1. Typical standard lunch, right? Liquidity grab, price could not push above the 33,750. I don't typically use mid figures, but you can use that as a key area of algorithmic price action. What happens? Price starts to break down. There's a grab of liquidity at a mid figure. Okay, let me just go ahead and mark it out. So if you look to your right, exactly at the 33,750, what do you see? Price came exactly to the 33,750. It went above just a hair, man. What time was this? 12:50. So 10 minutes till what? Till the PM session kind of starts pushing a little bit. Okay, cool. You see this liquidity grab rejecting, failing to displace above the 33,750. Now, this is actually something you learn in 2022 mentorship. This is the power of three: manipulation, distribution, displacement. I think I said it wrong, but essentially it's a liquidity grab, break of structure, and then a displacement down. That's a power of three. Power of three basically, okay, it's manipulation, Oh my God, I forgot it. Please forgive me, ICT students, man. But the most important thing is understanding what it means. Essentially, I see this liquidity grab, failure to displace, breakdown. Look at these inefficient prices. You could have entered here if you really wanted to. You could have even entered here, break the structure, came back into this order block, entry. This is my entry right here, bro. Once this candle closes, I probably would have waited a little bit depending on how I felt on the type of candle. But shit, once I see that, I'm in. I'm shorting that thing. Why? I'll tell you why. I'll tell you why. All this is cool. All this shit is cool. But this right here is what I like to see in real time. But you might ask why? ¿Por qué? ¿Por qué, amigo? Sit back, relax, kick your feet up, grab some Orville Rettenbacher or whatever, however you say that nigga's name. I gotta start using the N word. Look, at the 33,700, what's occurring? At the 33,700 at 1:15 p.m. Eastern Standard Time, man, an imbalance is formed. After what all this price action has occurred, I'm taking my shot. This is a high probable trade mainly because, I'll be honest, because of this higher time frame liquidity grab from Sunday. The market opened here coming into this daily inefficiency, followed by a breakdown with a bearish market. So, yeah, shorting the market was the right thing to do. I mean, I would have done it in a heartbeat, but I wasn't prepared. I literally saw the move when it was like right here, and I was like, well, the move's already going to be done because it was just too much for me to get like started and stuff. But yeah, man, it was a good trade. I'm sorry, it was here. Yeah, here. So yeah, it was a good trade, man. Very good trade. Yeah, that's PM session, man. PM session. Yo, I'm not gonna lie. Before ICT, I hardly ever took trades in a PM session. Like I would take a trade during New York and sometimes hold that thing until like 2 or 3 p.m., which was, the neophyte days. But yo, I mean, now if I miss New York, I can always trade PM, no problem. I might be able to catch like 1 or 2 trades, risk a decent amount. This was a very good trade. You feel me? Very, very good trade. It worked. It worked. I mean, it wins and this idea was supported. That's a new thing I'm going to try to start remembering to say. It's not so much that the trade won or lost, but the algorithmic agenda, this idea was supported. It was supported. That's all it is. I heard a trader say that, man, and I fell in love with that term or that phrase. It was supported. It was just a supported idea. That's all it is, bro. That's all it is, bro. I hope this helps, man. Look, everything, man, and everything is just time and price. That's why I have these random ass lines here. I don't typically use mid-figure, but I can use it in conjunction with other types of things. My entry is always at full figure. That's what I mean. I don't use it to enter, but I can use it as part of the daily recipe. Every day is going to be different, but that's the power of the inner circle trader, man. Because ICT teaches you how to really, really get saucy, but you got to put in the work. I'm sorry, like look, because I can see in real time. Oh, this is a liquidity grab. Why? It's at a full figure. This high right here. This is a wick, and it broke down. Liquidity grab, break a structure is shortened. The market is shortened. That's easy. And this is on a 1 minute. I could not see this shit 7 months ago. You know? You know what I'm saying? Like it's you just get saucy, man, but you tend to ignore the shit that you don't need to pay attention to. Why? Because it's all time at price, man. You're not gonna take a trade at um some people might, but I wouldn't take a trade at 7 a.m. Look at this. US30 is not nice at that time. It's not nice. What am I doing here? My money needs to be in this area where there's volume, where there's actual algorithmic, logical algorithmic times, right? I mean, 9:45 equities open was in this area. Look at all the manipulation that's happening there. But look at all the price action though. Look at this candle. 10 o'clock candle. What did it do? It grabbed the high here that broke down. So this was that algorithmic agenda, which was to grab the high here, which is rejecting from a 33,800. Interesting. You could have entered somewhere here, man. You could have entered one of these candles. I mean, this is not my entry, but look, you can enter once this candle closes and have your risks either at the high here or consequent encroachment of this wick, which is half of this wick. And another way to see that, which I'm kind of just trying to help, is use this. Use a Fibonacci. I'm using it the wrong way, but you get it. Just have your risk exactly at equilibrium. You don't really need to do all that, to be honest. Just kind of eyeball it. Be good at eyeballing, man. Have your risk here, and then this full figure, take it to the next one, man. High probable, man. Look at this. ICT, man. I may not explain ICT's teachings the best, man. I will be honest. If I had to tell you who to go to, of course I gotta put my boy Sam out. You know what I'm saying? My boy Sam is very good at explaining things. T-Trades is very good. ICT, of course, is ICT. My goal on this channel, is to inspire somebody out there to maybe look into ICT's teachings and other people's and just watch how I trade. Watch how I do it. I'm having fun just talking about this. I'm having fun. This is dope. I'm hoping I'm helping somebody, man. Like, this trading stuff is very subjective, but I'm literally just showing y'all how you can really get saucy. This is even a balanced price range. But you got to be able to, I just threw that in there randomly, but you got to be able to see these things. You got to be able to see these things, because once you see it, bro, you're going to take off. You're going to take off. You got to take off. But everything comes with discernment. But the best way to think about the market moves like a computer. It's a computer. The market moves it computes things. Algorithms computes things. Think about the algorithm without having any eyes. It just knows where to go based on a certain code. The code is a certain price and time. These unlock something. And what that something is your setup. Because at a certain time, during a certain time range, which is during New York, at a certain price, that's algorithmic. Because the algorithm knows more than likely at this time, there's a lot of volume, a lot of liquidity. So that's going to wrap it up for this video, man. I hope that helped, man. This was just another one of my rants, man. So like, comment, subscribe.